Thank you for joining us. I'm Marlon Bowling with you with a look at our ag commodity trade, and I actually have some new information hot off the wire for you. We just got our new ethanol production numbers in, and I wanted to reveal these numbers here for you. Let's take a look at the production last week for the U.S. ethanol production around the country. So we had a total of 1.07 this time million barrels per day. That was actually a little bit of an increase from what we had the previous week. That was at 1.064. So anyway, we have picked up the pace from what we had previously. We actually improved the 4-week average as well at 1.057 million barrels per day this week. So it is an improvement from the numbers that we had last week here. The ethanol stocks, 21.7 picked up, about 100,000 barrels this week. Imports remain at zero, though, just so you know about that. I want to go to the trading floor and talk about the firmer tone we have seen in this grain market, and we'll talk with Scott Gecas. He is with Longleaf Trading, and he joins us right now. Hey, Scott, how's things on the trading floor?
Things are pretty good today. Obviously, you've seen a little bit of a rally here. Just the trend in just across the board has been just sell every rally. So we're going to see how it plays out by the end of the day. You know, all these trade war talks are intensifying. You know, we need a little bit of help from weather as well as headlines to come out to push these markets a little bit higher. You know, one of the biggest things that sparked my interest reading about yesterday and today was China was dropping the import duties based on India and South Korea. So they haven't imported any of those soybeans all of last year or yet this year from them. But if they're gearing up to do that, they're setting it up to be on this hardline stance. Now, they have about 1.3 billion in cargo waiting to be shipped. You know, the rumor is that they are going to cancel it. We haven't heard any confirmation on that yet. So if they do that, that's going to be a little bit detrimental, but we got to wait and see. Right now, everything is all headline risk.
Okay, let's take a look at our futures, Scott. We'll start with this corn market in Chicago. They're right behind you. We have the July corn still a penny higher. We're trading at 353.5. And December new crop a penny higher at 374.25. Meanwhile, on that soybean trade, let's take a look here at July. We are now 3 higher at 870.25. Now, we had been as high as 878 earlier today. November new crop soybeans currently 3.5 higher at 891, and that has backed off of its earlier high by roughly about 7 cents now. Keep in mind, of course, we have the quarterly stocks report coming out on Friday during the trading session, and that will be very key. Also, we will get the official estimate of acreage in the U.S. for planted acres this year. Let's go ahead and take a look at the wheat. And in Chicago, July wheat, right now we have July trading 7 higher. We're at 476.5 per bushel. In the Kansas City market, we have that July contract now 5 higher at 463. And in Minneapolis, we have the July contract just a penny higher at 533.5 per bushel. And in the cotton market at the present time, we'll start with that December contract, the new crop contract. It's up 19 points, and we're trading at 84.70 cents per pound. Scott, we will come back here in just a moment, and I want to get your thoughts on how much impact the dollar value and maybe even the outside markets like crude oil might be having on the grain and livestock trade when we come back right after these messages. We are talking right now with Scott Gecas of Longleaf Trading, and he's at the edge of the trading floor in Chicago right now. I wanted to visit the value of the U.S. dollar here, Scott, and update everybody. This morning when we started out the opening of the daytime session here, we had it about 300 points higher. We're still like that. We're up 330 points right now at 94.680 on the September futures. And even the crude oil on the West Texas Intermediate crude oil market, it was like it was shot out of a cannon. It was up $1.70 at that time. Now we're up $1.88. And now $1.98. As soon as I say that, almost $2 higher. We're now quoted at $72.51 per barrel. A big time jump all of a sudden in the crude oil trade today. Why the jump in the energy market, Scott?
Well, I mean, it's all coming back to the headline risk again. So, you know, Trump came out and said, you know, he's going to dwindle off all imports from Iran by November. That had a significant effect. As soon as that headline broke yesterday, you know, everything popped, and now you're seeing a continuation into that. So we're going to see how that actually plays out. You know, OPEC did raise the output a little bit, not as much as expected, which you've seen from last Friday, which was the reason for the rally. Now, when all those productions, it's going to take such a long time for that to actually even hit the market. So it's going back and forth with, again, the headline risk worth is what's being traded and what is actually being done. So we have to see how all this is going to be playing out. I think oil's a little bit too overvalued right now. I don't see it hitting $80 a barrel like some other analysts are saying, but we got to wait and see how that is going out. One of the big key components of that for my thought process is Canada came out and they added 16 new rigs. So North America is ramping up production left and right from Canada to the US with the shale. So we're going to see how if that's really going to play a factor or if everyone's just going to be playing off of what's coming out of OPEC.
Okay, let's look at our live cattle trade on the futures board behind you there on the trading floor. Here we go with a look at our futures. We'll start with the June, which is 26 higher. That one's in delivery. The August contract, though, 51 lower now at 101.92 per hundredweight, exactly $1 off of our earlier high this morning. And October now 52 lower at 105.38 per hundredweight. On the feeder cattle side of things, we have the nearby August contract now down 95 at 145.15, just about $1 off of its earlier high this morning. September down 93 at 145.75. And let's take a look at the lean hog trade. Of course, they have a big report coming up tomorrow. We had the hogs under pressure on the open, but they have been firming up. In fact, July is on the high of the day now. It's 79.85. That's up 73 cents. August now 25 higher at $75. And yes, October now 33 higher at 61.25. Now, Scott, we have some early estimates of the hogs and pigs report coming out tomorrow. It'll be after the markets close up for the day, and the all hogs and pigs number is expected to be about 3% higher than a year ago. The kept for breeding number expected to be about 2% higher than last year, and the kept for marketing number at 103 or 3% higher than a year ago. Are you pretty comfortable with those numbers from your standpoint?
Well, we're going to see really how it comes out because, with production being higher, cutoff values being higher, slaughter rates going higher, it just confirms that all these oversupply concerns. If we cannot export this to Mexico, Canada, and China, they represent about 50% of U.S. pork. If that doesn't continue to happen, that you're going to see a big collapse in these markets. We're roughly looking at that 72.5 level in the hog market. That's really the line in the sand. We have a gap to fill lower if that does happen. So we're going to see how those numbers come out and see what those exports are going to see if they're going to even start ramping up, because right now they're just coming off slow. So we'll see.
That's interesting that you bring that up, because last week they were under 10,000 tons on the pork side, and we will get the export sales numbers tomorrow before the hogs and pigs report comes out. So we're going to get a lot of questions answered tomorrow, that's for sure. Thank you so much, Scott. Good to talk with you again.
Thank you.